Brokers. Question topic for today: real estate office insurance and what it should actually cover. Your insurance will replace your desk after a fire, but will it replace the $100,000 that walked out the door in a fake wire transfer? That's two completely different policies. So I'm going to talk about four things that your coverage should handle. I'm Sean. I'm a fractional CEO for insurance companies. Number one, stay with me for 3 minutes. Your basic policy is the starting line, not the finish line, right? So a BOP, a business owner policy, you should be familiar with that. A BOP uh, policy gives you the property and general liability, your furniture, your computers, your signage, and the buyer who trips at your open house, right? All those things are covered under a BOP, the real protection. But it does not cover these things: flood, professional mistakes, cyber, employee disputes, or auto. Each of those needs its own policy or to have an endorsements added to those policies. Number two, your E&O has to match the work you're doing today, right? What does that mean? The work you're doing today may not be the same as you did 5 years ago. So it's important to make sure those things are up to date with your E&O. Errors and omissions covers the advice side, missed deadlines, failure to disclose, bad information on a listing, right? But if you've added property management, transaction coordination, or referrals since your last renewal and never told your agent, those services may not be covered at all. So that's important to make sure you're having annual reviews with your agent to make sure your policy is adequately covering your business. Number three, cyber coverage. Coverage. This is really wire fraud, but criminals don't hack your firewall. They impersonate your title company, redirect closing funds, and so on. So ask two questions. Does the policy include social engineering and funds transfers fraud? And is the limit big enough for the deals you actually close? Then add the office rule. Every wiring change gets verified by voice on a number that you already had on file. Important information right there. Number four, last thing, the gaps nobody buys until after the claim. Hired and non-auto owned auto, because your agents drive their own cars to showings to show homes, land, whatever. Uh, Business income. So revenue keeps going while you rebuild, right? If you had a hurricane or tornado damage and you got to rebuild or remodel, you're down. So you need business income on your policy. EPLI, right? Moment you have employees, you need that. What about flood? Flood is not generally typically a part of the policy. You need a separate policy in most cases for flood, which is going to cover your standard property, contents, those sort of things. Even if you're not in a flood zone, hear me when I say this, if you're not in a flood zone, you still need a policy. We consider everybody in a flood zone, right? Remember North Carolina a few years ago? We consider everybody in a flood zone. So we can help you. Fill out the form below. Remember, the cheapest premium is a terrible deal if it comes with a six-figure hole in it. All right. We'd love to help you. Fill out the form below. Thank you.